Hello, chart watchers, and welcome to this Thursday, July 18th Market Watchers Live show with your hosts, Erin Swenlin and Julius de Kempenaer today. For those of you joining us for the first time today, welcome to our show. And for our regulars, welcome back. Let's take a look at what's going on in the market currently. If I can get there. All right, so we can see the Dow and most of the major markets are down right now slightly, except for the Russell 2000, which is up and looks like it wants to break above that 1700 level. We've also got the Wilshire 5000, small caps as well, down just slightly, and we have the TNX. The Treasury yields are currently down to 2.855%. The VIX is rising a bit today. We're now just above 12.5. USO oil has been an interesting area of the market to look at. We'll definitely talk about that later, but oil is up slightly. Currently, USO reading at 14.18. Utilities is the best performing sector this morning, and they are up a little bit below 0.7%. We also have in that sector the gas and the gas producers and the conventional electricity are the two industry groups within utilities doing especially well. And Dominion Energy, the big mover right now, up 3% from that conventional electricity area of the market. All right, let's bring in my co-host today, Julius. How are you doing today, Julius?
I'm good, Erin. Thank you.
Yep, excited to be filling in for Tom.
Yeah, you're filling in for Tom, and I'm filling in for you.
Yeah,
so,
I
guess we both have some big shoes to fill.
Absolutely, it's always a challenge. I always miss Tom a great deal when he is gone because I always realize and appreciate what he takes care of in the background that I don't necessarily see. So
that's true. That's true. I've filled in for you with Tom, and he does a lot. That's true.
Absolutely. All right, well, let's go ahead and look at our upcoming schedule. And as you can see, as we get that ready for you, that we have tomorrow everything stock charts, and my understanding is that Chip Anderson will be in for that. Monday, I will be doing my decision point report, giving you the update on what to expect in the week. Tom will be doing a workshop. He does know that, but he doesn't have a subject just yet. So if you want to put in the survey responses, some ideas for him, I know he'd appreciate that. And Roman and Bruce will be here to talk Wyckoff on Wednesday of next week. So you'll definitely want to tune in next week. We've got a lot going on as usual. Today, we are going to start with Julius. You've got a very good presentation, I'm sure, lined up for us. We're going to do the 10 and 10 to 1 in hopefully 10 minutes. I don't know. We'll have to see how that goes. But our first symbol is going to be TREX, T-R-E-X. And finally, we're going to finish off with what would you do? And that poll should already be running. You're going to be looking at Lockheed Martin today. And so we're very curious what your thoughts are on that. So please go ahead and take that poll. But now let's go ahead and get into some technical news. All right. So the first thing I did want to show you is the fact that we are seeing the sectors. Let's look at that summary. Right now that utilities are leading currently. And within that utility sector, and we're up almost 1% right now for utilities. Cyclicals are following behind, just up a little bit over 0.25%. But definitely utilities are feeling the love today with gas distribution, as I noted earlier, and conventional electricity, the leaders within that group. Although if you look, multi-utilities are also up 0.75%. Telecom is the one that's hurting right now, down almost well, it looks like just over 0.5%. So let's go ahead. I wanted to show you in the gas distribution area some of the leaders right now. And, you know, you can tell at this point that we have Farrell gas, and this one is leading currently, and you can see it's up over 2.75%. But you know, in the big picture on the chart, it's not all that impressive to me. We are still in a declining trend, and although we are up that much, you know, we saw a very deep decline yesterday. You could see that in the thumbnail. However, with today's big move, we are seeing the PMO starting to decelerate and thinking about moving higher. But I'm not really a fan of this particular area of the market right now, mainly because you can see that the PMOs are just not there. This one, however, Crestwood Equity Partners, really nice chart setup here. We have a PMO buy signal that's now occurred. We can see this really pretty cup. The only thing I would be a little bit concerned about right now is the fact that it does look like a parabolic move. And, you know, when you get those parabolic moves, if we get up to this overhead resistance and it decides to fall, it could fall very fast and very hard out of a parabolic. So something to keep in mind right there. All right, let's go ahead and look at oil. I wanted to show you those charts. Let's go over here. And we will take a look at USO. In fact, I will give you my picture right here from the Decision Point blog that I did yesterday. And as you can see, we had this negative divergence in play. And in my opinion, it executed with this decline. You know, we went down below that area of support, you know, just an intermediate area of support on those tops from April. And my thought had been, based on what I was seeing with the PMO, that we would continue lower to at least $13.50 or $13. But now you can see we are getting a bit of a price rise here. I did read today, though, that apparently Texas is going to be the third largest in the world supplier of oil. And that'll be very interesting to see how that affects the price scales and situation. But right now, we can see that USO is reading just above $14, $14.14. The other area of the market I wanted to show you, of course, is the dollar, which is actually having quite a good day. And, you know, my concern yesterday when I'd written my DP alert was the fact we are coming up on that overhead resistance. Well, of course, it didn't cause much of a problem for the dollar as it leapfrogged that area of overhead resistance. This is UUP. And now we have a PMO that is rising, looks a lot more healthy than it did over the past week. And look at the scooter and OBV, they're rising nicely. So the look of the dollar is quite bullish, I would say, at this moment in time. And I'm going to show you the weekly just so you can get a better feel as to what's going on here and how important overhead resistance is at about that 25.25 area. Now, when you look at the weekly chart, we're on a very nice PMO buy signal. PMO on the weekly chart's now in positive territory. I would look for a continued breakout here. And we have this gap that was earlier, I should say later in the end of 2016. And so that's honestly where I would be looking for the next possible area that might pose some resistance, which would be about 25, it looks like 60, 65, somewhere in there. And, you know, it needs to close that gap, and generally gaps are closed over time. So I am expecting to see the gap and to close, and that would bring us all the way up here for UUP up to 25.25. So I'm sorry, 25.75. So I'm looking toward higher prices on gold or on the dollar. So what does that tell us about gold? Well, typically they are in a almost perfect reverse correlation. And currently, as far as the 50-day average of the correlation, it's right now at a negative 0.78. So expect 3/4 of the time at this point that you're going to see gold travel opposite of the dollar. And you could see how very bullish the dollar was, that chart. And then you compare it to gold, and you can definitely understand why we look at this reverse correlation, because gold is now, you know, really in a free fall, in my opinion. I think we're going to be seeing even lower prices, especially if we see this rise on the dollar that the daily and weekly chart are setting up. I've been looking at the 1200 level right here at this low from last year in July. And so that's where I would be a bit concerned as far as, moving down quickly toward that area of support. And, when you look at this on the weekly chart, you can see that there really isn't any support that you can just really go right into until you get to that 1200 level. And that you can see has all of these touches to that support line. So it's a very strong area of support. And, we'll be watching very closely when it does get down to that 1200 level. But I have to say, when I look at that daily chart, when I look at this weekly chart with that PMO sell signal and a PMO that's now in negative territory, something we haven't seen since the beginning of 2017. That was the last time the weekly PMO was in the negative for gold. So I would be expecting lower prices. I would certainly be looking for a drop to the 1200 level. And, based on what I'm seeing with this PMO, I think that you could see a drop even below 1200, which that'll be quite shocking when you start looking at where we've been this year, all the way up and, above 1350, 1360. And now we're talking about a drop past 1200 that could even go to about 1125 when I look at the next area of support that could be considered strong based on these two lows back here. So gold is a problem. I'd definitely be concerned about gold at this point. Looking at bonds, I thought that would be an interesting one as well to go over. And you can see I was bearish yesterday when I wrote the DP alert. Highly recommend you go check that out in the Decision Point blog. I go through all of the big four. I look at all of our indicators and the S&P 500. So recommend you check that out. And, yesterday I was very bearish on bonds and I remain so, even though we did see a move back up above this area of what was support and had become resistance. But I don't see that much improvement on this chart. We've got that PMO sell signal in line. We are seeing deceleration with this move to the upside, but I'm not expecting this move to continue. Now, a lot of people will point out, and I know Carl had pointed out, that we just got that long-term trend model buy signal where the 50 crossed above the 200-day EMA. It's an important thing to note. However, I still think we're going to be looking for a drop down to that 200-day EMA, possibly just below. But I don't think that that's going to kill that long-term buy signal. It would really have to remain and trade under that 200-day EMA for a pretty long period of time. And I don't think we're quite there yet. But I would expect to see some movement down toward that 200-day EMA, even though we saw a little pop above this high that we had back in late May. All right, let's look at some economic news. I'm just going to pull up our SPY charts so you can gander at that while we talk about it. All right, and as you can see, we beat the overhead resistance, and I know we've been talking about that a lot. This is the SPY, and we've made it above, and we're making this, it's a nice rising trend that we're in. And if you look in the thumbnail, you could draw a rising bottoms trend line and match that up and give us a nice rising trend channel. So I'm expecting higher prices. And when you look at the PMO on the buy, it's very encouraging. And look at the OBV. So at this point, it's very hard to become bearish about the market. And, even though we're down 0.25% today, I'm not too concerned. I would still be expecting higher prices. And we'll talk a bit more about that when we go through sentiment tomorrow. So you'll want to definitely stick around for that tomorrow so I can get through those sentiment numbers. All right, so the economic report really that was the big one, of course, is the jobless claims. And we did see another decline. And we're down to the lowest level since 1969. So clearly the economy is doing better. We can certainly seeing quite a movement on jobless claims moving lower. And I believe they were lower by 8,000 today. lowering it to 207,000 jobless claims. So we'll have to keep an eye on that, but we continue to see it move down. And like I said, we're currently at the lowest level for unemployment that we've seen since 1969. So quite interesting there. All right. The other thing, I had some key earnings that I wanted to look at with you. And I'm just going to pull up some of these charts. Of course, we had a lot of earnings released yesterday, and in the news, especially right now, would be Travelers and American Express, both of which are really weighing heavy on the Dow, and that is likely one of the reasons we're seeing such a problem with the Dow is looking at these two stocks, and you can see that with Travelers, we're down over 3%. We could be looking at a little bit of a handle, though, on a cup, but that decline is pretty heavy. And currently, we're trading below that 20-day EMA. So you can see both the 20-day EMA and, of course, the 50 all turning down. The PMO is decelerating below the zero line. Now, this PMO buy signal looks really great, and you can see the OBV was tracking in a very good way. But of course, with this decline, we're now seeing the PMO stunted, and the scooter is starting to travel much lower. So I would watch this closely, because we are looking at a level back from early May. And if we can hold that level, this could turn very interesting, as Tom and I like to say. The other one, like I was saying, was American Express. So let's look at that. All righty. And as you can see in this big trading range and broke down below a rising trend line, PMO is turned down sharply on this move that's about 2.5% lower for American Express. They did not meet the revenue that was expected, and it's obviously causing some problems here for American Express. We also saw, as far as the losers in the earnings season, U.S. Bank Corp, USB was down over 1%. We could also note that IBM has made a nice big move to the upside. In fact, I'll just show you that one very quickly. And there you go, big gap up. And now using this high from June as support. You can see 20 just getting ready to cross above that 50 for an intermediate term trend model buy signal. But one thing I would like to note on this chart for IBM is that we got that buy signal on the PMO earlier this month, and it was already telling us to think about higher prices. And although we did have that pullback, we are now moving back up. So a nice setup here. I like that move above that area of support at 147.50. We'll want to keep an eye on that. A couple of upgrades and downgrades for you today. Let's see, upgraded of interest would be Morgan Stanley. And I think we looked at this one yesterday because we did get that big gap up, and it's continuing to hold support at that now gap support that was formed yesterday. PMO is still on a nice buy signal. You can see the indicators below the OBV scooter are moving in the right direction. We're trading above the 50-day EMA. So I think this one's looking good, and I suspect we're going to see it continue higher. Square, which had been downgraded, has now been upgraded again. PMO buy signal just happened. You can see the breakout above overhead resistance. I think that Square is looking good. I'd expect higher prices coming in out of that. Tesla downgraded today. Look at that very quickly. And as you can see, I'm looking at this as a reverse flag. However, as I say, however, comma, you could make a case here for an ascending triangle coming off of this, what could be considered a reverse flag. I'm not going into, I'm not convinced about the reverse flag, and especially, even though we've had this downgrade, you can see an ascending triangle in the shorter term, and that is a bullish pattern. I don't like this PMO decline below its signal line, but I suspect I don't think we're going to see too much deterioration here on Tesla. I'm still looking for some upside movement, even off of this downgrade. I'd be watching to see if we can't get above that area at about 325 to execute that short-term ascending triangle. And that's all my technical news for the day. Another reminder, go ahead and take that poll because we'll be using it as part of our final segment. And Julius, time to come back.
Or did you mean to say time to wake up?
Yeah, well, I was going to be nice.
Yeah. No, so, not a problem. Not a problem.
Yeah, what do you have for us today? I'm very.
Well, let me see. Let me first try to share my screen with you guys, and we'll talk. My idea for today was to, because I will be here tomorrow as well. I have some sort of like 3 subjects that I'd like to cover between now and tomorrow and the time that we're given. The first one is talk everybody through the 30 Dow stocks, following a blog that I wrote recently on the components of the Dow Jones, and I think it's interesting to talk people through that post and how I look at that RRG and which stocks I picked and for what reason, and then dive into them and look at those charts. Maybe see, because it's a couple of days ago that it was published, see what has happened. The second one is a deep dive in Disney. I published a blog today on Walt Disney. Looking at the price, I think that I was very, very timely, actually, because I published it when the market was still closed. And it's actually doing what I was hoping it was doing or expecting it to do. We can have a little bit of a deep dive into Walt Disney on various time frames. We can do that either today or tomorrow because it's a very long-term picture that I'm painting there. And the third one is a little bit more theoretical piece where I want to show people or maybe prove that when you have an RRG and you measure all the distances for the various securities on the plot to the center, to the benchmark, when you take all those vectors and you add them up, that it will actually come down to 0. So, everything is relative. Because everything is relative, it should all come down to the S&P 500 or to whatever benchmark you have. And there is a way that we can show, that we can prove that all these vectors on that chart actually, when you add up all these vectors, positives and negatives, it comes down to 0. So those are the 3 things that I'd like to cover. The one thing that you triggered me to do when you were going over your news is you talked about the dollar and how it was improving again. And I want to remind people that you can actually use RRG charts to look at currency rotation as well. And sometimes they give very interesting pictures. There is a drop-down box. If you scroll all the way down, you've got the G10 Forex with the US dollar base that is looking at the currency or at the world from a US perspective, which is, I guess, 98% of our audience today. So when we do that, you have here a weekly RRG of these are 9 currencies because the US dollar is number 10, and that's the center of the chart right now. And as you can see, all these pairs are in the lower left-hand quadrant, so they're all lagging against the dollar. So this is, I cannot make a clearer picture of US dollar strength versus the rest of the world. This is a weekly chart, so it's a little bit longer term picture. If we switch that to daily and update it, you got a little bit more movement, but still you see that the majority is shifted to the left, and the tails, they are all rotating downward, more or less. There's only one exception, 2 exceptions that are rotating upward, but they are in the lagging quadrant as well. And one of the things that you may want to look back at is in the Don't Ignore This Chart blog. Last week, I believe, I wrote a piece on the Norwegian krona versus the Japanese yen. It's probably not a very popular trade, but I used the setup that was visible on the RRG chart to show how you could find trading ideas using an RRG chart also in currencies. If we isolate those two from this whole thing, I can just go in the box, and I need to only keep, here it is, dollar, GPY, US dollar, and NOK is right behind it. So I'll get rid of those. Put those. Mind you, we're using the benchmark $1. If you don't know what that is, just go to the search on stock charts, and you'll find a couple of articles where I'm explaining what $1 does and why you need $1 as a benchmark for currencies. Now, if we scroll back in time, then this is what I noticed on on the RRG a while ago. So this was July 3rd. And you see that they're starting to move in opposite directions. And that's stuff that I'd like to see. So in this case, it was the Norwegian krona starting to move higher on both axes, and the Japanese yen starting to move lower on these axes. And that's the kind of trades that I'm looking for, because this is relative strength. So this is the Norwegian krona expressing relative strength against the US dollar, and it's the Japanese yen expressing weakness. Now, the trick is that you can create a chart of this currency, but dollar NOK GPY, which is the cross that we would like to see, does not exist on stock charts. Now, there is a way, it's called, in currency land, they have something that's called triangular calculation. And the way you do it on stock charts is you take NOK USD and you divide it by dollar GPY USD. And what we're actually effectively looking at now is the price of NOK versus JPY. And I need to put that to a daily. And when I looked at that, it was just about moving here. It moved out of this consolidation pattern, jumped higher to 137, and then you see it follow through. Well, just for illustration purposes, if you're into currencies, you know, the majority of people are trading euro dollar, dollar yen, maybe cable, but NOK yen is a trade that's not very crowded, and sometimes you get very nice trading ideas that not a lot of other people are looking at. Okay, back to the Dow, back to stocks, because that's the majority of our people are looking at. Again, in the groups, you can find an RRG for the Dow 30 Industrials right here, and it will populate your RRG with all the 30 Dow stocks and put it against the Dow Jones Industrial Index. What I see here, what I do is usually I put the length a little bit smaller because there's a lot of stocks here, and we can look at this chart and get a few ideas. And just by eyeballing this, I thought that I saw a more heavy concentration of stocks above 100 on the RS momentum scale than below. So I eyeballed that the majority of stocks was in the upper half of the RRG and not in the lower half. And the best way to do that is you just set the tail to 0, and then it becomes pretty clear that you got a lot of stocks either in improving or in leading, and only a few in weakening and in lagging. The way I translated that for myself is that, because this means that there is upward momentum, that in this universe there is, in general, upward momentum, upward relative momentum for the stocks that make up the Dow. So if you want to translate that to breadth, this current market movement is still supported by a lot of stocks that are showing strong relative momentum. Now, adding a little bit of a tail to this universe, now it becomes a little bit tricky, but you know that I like to play around with the table below it, because that gives you a lot of information as well. Right now, the table is sorted by tail color. So this is everything that's in the leading quadrant. The blues are all in the improving quadrant. The yellows or oranges are in the weakening, and the reds are in the lagging quadrant. That's a good way to toggle through the universe by simply selecting, in this case, Nike, and then you need to hold down your control key and then use the down arrow to toggle through the universe. So with this, you can actually very quickly pick up a number of things that you want to see. So if we go back, then, for example, Nike is a stock that I like. I like this. It's the strongest stock in terms of RS ratio. It's moving higher on both axes. It came from weakening after a rotation, so it's very short stint through weakening before it jumped back into leading. So it is a stock that's already outperforming the Dow for a while, and it just started a new leg upward. This is one of the stocks that I want to have a better look at later on, because this is something that I want to inspect on a regular chart. Visa, I don't like this too much. It's moving down. It's probably better stuff out there. Click. Apple, very strong stock, very important stock, still in leading, but you see that over the last 2 weeks, relative momentum is starting to roll over. Not very interested to look at this stock at the moment. Microsoft, steady. You see the difference between the tail lengths. Microsoft is a very short tail length. If we play this back, it's from here onwards, it's just static, probably at its place. It's moving down a little bit. Nothing to get super excited about. UNH, same. Nothing to get super excited about. Merck, same. HD, interesting stock. I know how the chart looks. It looks pretty good. You see a little bit of a correction, but it already starts to curl up a little bit. It's inside leading, so keep an eye on it maybe because it looks pretty good. XOM, inside leading, but curling over downwards already. Not very interested to see that. Disney, that's a very interesting stock to watch. You may have noticed that I published a blog on Disney today. I'm not sure if we can go into everything, but there is one stock I have to pick from the Dow Jones Industrials at this moment in time. It will be Disney, because I think this stock is poised to move much higher, especially following the price action today. I'll in the blog there will be a caveat, because it's looking at monthly charts, and we're just halfway the month right now, or a little bit further. But it looks pretty good. This is the one that I would definitely want to study much more. PFE, looking good, starting to do there. VZ, interesting. Triple M, interesting heading, but very far to the left. So not super interesting, because there's still a very good chance that it's going to roll over and continue its underperformance on the left-hand side. Walmart, getting interesting. What I like here is the fact that you see these 3 weeks very close together, and all of a sudden now you see a jump. So something starts to cook on Walmart. This is one that you might want to have a look at. PG is a stock that is standing out. It's improving. It's powering higher. I will have a look at the chart later on. But I can tell you, when I did that for my blog, I decided to ditch it, because it shows very wide swings. So, not everything that you see on an RRG that looks good is actually translating well to a regular chart. WBA, not much happening there. J&J, same, just crossing over into improving. These are the ones that you want to keep an eye on going further, to see if they can maintain this level of momentum, this level of increased relative strength. DWDP rolling over already. Big risk of rolling back down to the lagging quadrant. Not very interesting to look at right now. KO, definitely interesting. Almost crossing over into leading. That's the stocks that I'd like to have a look at. UTX, similar. This is completing a rotation, as you can see. Moving over into improving and almost crossing over into leading. Definitely worth a further look. McDonald's look nice, but look at this. It's inside improving. This looks nice. Then it starts to roll over. it goes into the leading quadrant, but it goes into the leading quadrant at while it is already decreasing on the momentum axis. It can work out fine, but I've found that this is not the best way to enter the leading quadrant. What you'd like to see is entering the leading quadrant at a strong RRG heading, so while gaining on both axes. INTC, strong, high RS ratio levels, which makes me a little bit reluctant to become too bearish because it's in a strong sector and it's a strong stock, especially if you're in the Dow. It's one of the stronger stocks. It's one of the higher RS ratio levels. So there's a very good chance that this one can roll over. So I'll be very careful with this, either on the long side or the short side. But I'll be on the jumping board when INTC starts to curl back up and starts to pick up relative momentum. Then I want to be there. Then this is one that I want to pick up. Boeing, similar. It was a very strong stock. Look at this rotation. It was the strongest stock for a while inside the Dow. It started to lose relative strength, relative momentum, went into the weakening quadrant, and then look at the length of the tail. Here you see that there is a lot of power behind that move. It's a relatively long tail, big distances between the observations. And then all of a sudden, these distances start to shrink. They get smaller, and BA starts to turn around. And that's one of the areas where I'm thinking of doing a bit of research, because this is a pattern that I've seen happening more and more, or a setup that I've seen more and more, where when the distances between the observations get smaller, it seems easier for the stock to turn around. And you see that's happening here with BA. You got the big distances and you got a straight line in your tail. And then when these distances start to shrink, the chances of turning become higher. And I've thought about ways on how I could explain that to people. And maybe the best way is, with chain with the shackles, that is, if the shackles are small, you can make a very nice curve when you put the chain on the ground. When the shackles are very large, it's a lot harder to make a nice rounding curve. You get like these hooks, or it has to be a very, very big arch, a very big curve, something like that. I hope you understand it. I mean, I think it makes sense, but I have no idea how it comes across when I say it. So bear with me, and please forgive me if it sounds really stupid. But I like the way that stocks turn and tails turn when the distances between these observations get smaller and smaller. And you see it happening here again. So this tail is now short, still a good chance for BA to curl back up. CSCO, I think, is done. I mean, I think that CSCO is a stock and technology that's poised to move into the lagging quadrant. And we'll have a look at that chart later on when we have a little bit of time. And here we have CVX that has just crossed over either today or this week at least, moving down. So that doesn't look too good either. Same for AXP. GS inside lagging, picking up momentum, but look at the level of RS ratio. And you've got to compare that to the rest of the universe. So if I work from left to right, GS is probably the second. So that's the second worst stock in the universe, despite the pickup of relative momentum in terms of relative strength. If you rank it on the RS ratio, GS is one of the weakest stocks in the universe. TRV the same, and the one that is weak but also has a lot of potential to move lower seems to be Caterpillar, because inside the lagging quadrant, this is the only stock that is pointing to the lower left. It's actually the only stock that's losing on both axes at the same time. IMEM is picking up. It's not there yet, but you can have a look at it potentially for further improvement. And then here we have JP Morgan, which is just moving into the lagging quadrant. So that's the way I work my way through the RRG. While I'm doing that, I make a little bit of, I make a few notes of the ticker symbols that I'd like to inspect a little bit further. And I usually begin with the stuff that's weak, because some people may have heard me tell this story in one of my previous presentations. But earlier in my career, when I was working on the investment bank, I had an intern on my desk who was asked to go over a lot of my research publications and recommendations that I did. And I won't bore you with the whole story again, but the most important outcome of one of his research exercises was in which he found out that stocks or sectors that I had an underperformance, or the system had an underperformance recommendation on, scored a significant higher excess return than the stocks or sectors that we had an outperformance recommendation on. So what that told me is that it is much more important to know what you should not own rather than what you own. So I just see a message here that my charts are blurry. Expanding window to it's full screen.
Okay, yeah.
Let me see. I can maybe I can zoom. Is this better? It's zoomed out a little bit now, but now I don't have a lot of screen real estate left.
Yeah, it's not much.
Okay.
Much no worries.
All right. I hope it makes sense. So the story there is that it's more important to know what you should not own rather than to know what you should own. And also from a risk perspective, if you, for example, in this case, you try to beat the Dow, a lot of people try to build a portfolio for holding 5 or 10 Dow stocks, where I think it is much less risky and a safer bet to build a portfolio of 20 or 25 Dow stocks, avoiding the bottom 5 or the bottom 10. Anyway, that's why I always start with the lower end. So in this case, the chart that I'd like to look at is Caterpillar. Let me get my Dow 30. I wanted to say Dow dirty stocks. All right. So here is Caterpillar. The reason why I shrink my browser is because I always have to look at this. I mean, now.
Oh, that looks really good.
Yeah, but it scrolls off. You can't see a lot. Anyway, we deal with that. If we start at the bottom here, we see that the RRG lines obviously are moving down because that's what puts the stock inside the lagging quadrant. But what triggered me to be really bearish for Caterpillar is the fact that we had this very nice relative run up from, let's say, the transition from 2015 to 2016. For 2 years, there was nothing wrong. It was one of the strongest stocks in the Dow. And then here you see a break and you think, yay, that's very strong, it's very good. And you see that the stock is, shooting even higher. I heard Erin speak about parabolic moves. Well, here you got a parabolic move. And then it started to roll over and level off and make big swings. And I remember in Market Watchers Live that there was somewhere in April, I had a story that was all eyes on the cat, because what I thought I saw was a falling wedge pattern right here. If you draw the imaginary line, you can see that there was something that you could qualify as a falling wedge, and it has just broken out there. So I thought we're building this base here. We have this falling wedge. We're moving higher. We're above this very long-term resistance and relative strength. What can possibly go wrong? Well, for a few weeks, everything was good because we held above that important resistance level that was now acting as support. But the price didn't come through. I mean, it moved a little bit higher. We had 1 and then 2 tries to move higher, but it didn't really work. And we put in this new lower high. And then at that time, the relative strength broke back below that former resistance level that should have acted as support, and we have this falling, descending triangle formation, and that actually, triggered a continuation of the decline of the RS ratio, where I was betting on a move up because this momentum was moving up. So everything fell apart. Caterpillar broke relative strength, pushed it into the weakening and later the lagging quadrant. And now Caterpillar is, I think, one of the weaker stocks because this looks like it's setting up for a new downtrend, lower highs, lower lows. Support in the 130, maybe 125 area. If we break that, I think we're looking at 100 again. And from a relative point of view, I don't see anything positive coming out of that in the very near future. So Caterpillar is one of the stocks that I'll be very, very cautious about.
I mean, you could say that that's a giant flag right now.
Yeah, you know what? I don't think that flags can be that long. If you go to the literature and you got to go way back to Edwards and McGee, like real chart pattern descriptions, and the way I learned it. And by the way, saying this makes me feel really, really old. But flags are patterns that should last 1 to 3 weeks, and that's it. And this is in the time when charts were daily. Intraday charts didn't really exist. Charts were daily, maybe weekly. But and I still use those quote unquote rules of the old books. And I think a flag pattern it should really be a flag pull and then a 1 to 3 week counter type correction. And then you have the breakout. So when you have stuff like this, I agree. It looks like a giant flag, but I don't think that is how flags are working.
Right. Well, technically, yeah, you're absolutely right. Bulkowski also, when he's tested these, he says the quote unquote high and tight flags are the best, and those of course do present, like you're saying, in about a 3 week time frame, and the flag pulls are more vertical. But yes, this really is more of the parabolic and the breakdown, I'd have to say.
Yeah, that is breaking down. I mean, you don't have to be a rocket scientist nor a technician to see that this one's breaking down out of that super strong there. We talked about CAT for a while, and the discussion could have been very short. Forget about it. Avoid it. It's not a very good stock at the moment. Let's move to like a few minutes left. Let's do Cisco, because I really think that Cisco is a stock that you should avoid. Intel still has probably some possibilities, but what I see here in Cisco is something similar. I mean, if you look at the red strength line, we had a nice move here, but this looks like topping formation to me, especially when it broke below that previous low. It held up for a little while, and now it's breaking down. So it's pretty much putting relative strength in a downtrend, and the RRG lines are following suit, and it's now pushed into the lagging quadrant. Because they're both below 100 now. So the update is that it's now inside the lagging quadrant versus SPY, that is. And you see that the break here, because we had this break and then we rallied to 44. So that old support line is now acting as resistance. So, I don't like it, but I really don't like it anymore if it takes out these recent lows. And here, that's probably 42 something. No, sorry, 41. And then here, this low at 40. Then for sure, Cisco will be going down the drain. On the good side, Erin, you tell me how much time I have left.
Oh, well, if you want to just finish this one, because we can get started on that 10 and 10 whenever.
Yeah, then I'll end it on a positive note, and I'll do that with Nike, because that's the one that I wrote about, and then we'll save Disney for tomorrow. Nike here is a completely different picture. because Nike was in a solid downtrend for 2 years. This was a very nice toppish formation, late 2015, early 2016, started to nosedive, went into a downtrend, moved lower, 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 and then started to turn around. What I liked here is that the troughs, the distance between the troughs was getting less, which is a positive sign because the downward push is not as strong anymore. Started to pick up, took out overhead resistance, and now seems to be forming a new series of higher highs and higher lows on the relative line. That's translated in a set of RRG lines where the RS ratio is still solidly above 100, 106.80, 107 almost, which is a very high level. So nothing wrong there. But the good news is that after a period of losing momentum, it has just turned back up again, and now momentum is on the rise again and above 0. So Nike rotated from leading into weakening and now back into leading again. And as we know, these are very strong situations because we're looking at the second move of the uptrend. So this here was the first move, started right here when it crossed over into the leading quadrant, when the red one crossed above the green together. And then here, when the green crossed below and red was still above it, we went into the weakening quadrant. And here now we're picking up the second part of that uptrend to move higher. So as long as this uptrend remains intact, we're cool. And if we translate that to the price chart, we'll see a very nice rising channel that's still there. We're right in the middle. There is ample space to move for Nike within the boundaries of this channel. So there is no danger of an immediate break in either direction, which makes this a very solid stock for me, which I expect to continue higher on price, but especially on relative strength versus the Dow in the SPY. Let's keep it at this for now.
All right. Let's see. I'm getting those last symbol requests in there. And once we pick them, Julius, feel free to go into that chat room. There were a few questions that you...
Yeah, I will. When you are talking, I will see what's out there and answer if I can, or otherwise make a note and come back to it tomorrow or in one of the blogs. Yeah, and by the way, guys, feel free to put any comments you have on the discuss below my blogs. I love it. I love to discuss it. I love to hear what you think. And if you have any ideas that you thought I should expand a little bit more about or unclear, any universes that I'm not covering on RRGs and you think are interesting, please drop it there. And I know that there's at least one person that wants to read it.
All right. So what we're going to do today, guys, is a little different than what we normally do. I went ahead and put in all of the 10 and 10 requests. And then what we're going to do is, like we generally do, is go look at the RRG. But instead of me picking the symbols, the final 8 will be picked by Julius based on the RRG that we're going to look at. The second symbol, though, is the one that everybody votes on in the chat room as the one they want to see the most. Currently, it looks like TJ Maxx is leading right now. So Walmart's very close behind. So if you want one or the other, get in there and vote, and that will be the second one. So let's go ahead though first, and we will look at the RRG of these 30 some stock symbols. And then since we usually do this in the shorter term, I'm going to switch it over to daily. And we'll shorten those tails so that it'll be a little easier for you to see what's going on. And all right, so I can zoom in here a little bit for you. Is there a certain quadrant or anything you want me to?
Yeah, if you just zoom out a little bit, zoom out. Okay, and now daily. You have daily already. Mm-hmm. Okay, now select. Just leave it. So we have everything on it. Mm-hmm. Maybe if you do fit, if you click fit,
okay,
in the button there, yeah, and then zoom out a little bit, minus, yeah, oh yeah, and now select in the table FSLR.
Okay.
And we'll just browse through all Yeah, now scroll the screen back up. All right. So, and now you hold your control key and then your down arrow.
Okay.
Yeah, there you go. So FSLR, just go to the next one. Yeah, what's that?
Oh, okay. We'll go back. XP.
Pharma.
Pharma.
Just then scroll through time a little bit, left and right.
Okay.
See how the rotation was. You can do that with your arrow keys. You don't have to use your mouse. Just use your arrow keys left and right.
Oh,
Left and
okay.
right.
Got it.
Left and right. Yeah.
See?
Okay. See. Yeah. Now scroll to now. So see how the recent rotation is.
Okay.
Yeah. Strong. Yeah, that's the one that's one you want to look at.
Okay.
It could potentially go there. All
Okay.
right. Now control down.
Okay. Look at the next one here.
Yeah. Let's keep an open eye for Momo because it is interesting, but it's very low. But it's got very nice momentum. So if we don't have anything else, then we can look at Momo.
Okay.
Yeah. Yeah.
Mm-hmm.
MGA.
MGA. Every time I do the arrow, it keeps going back down.
But you got to keep while you're on a Mac. I don't know on a Windows PC, it's control down, and you that was what was the other one? That SV. Yeah, this one.
SIV.
Potentially. Let's.
All right, we can't take too long to pick these. So
yeah. Okay, go on.
All
Just
right.
go. No. Yes.
Okay. MGNX.
Yeah.
Okay.
No. Yes.
Okay.
Very close, but it seems to be pointing in the right direction. No. 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 No.
That could be.
Is that scroll that through time? It looks like it's rolling up. Yeah. Interesting. Walmart.
Here we go.
Walmart. Yeah. Okay. Rolls up. Yeah.
All righty. We've got 4 more with 2 in the hopper that we may choose.
Okay. You need to scroll the slider all the way to the right because we're now looking. There
we go.
No, further because you're looking at July 12th now.
Oh, how do I get that there?
Just click it and then there you go.
There we are. Okay. So
that doesn't look very nice. Walmart was nice. Ooh, that's scary. You can look at this because look at it because put it in because it's something that you should avoid.
Yeah. Okay.
No.
Everybody's like, darn it, I wanted that.
Oh, guys, what are you picking? This one, that VGR and RGLD. Look at those. They should be. They're negatives. They look weird. They start deteriorating.
Mm-hmm. All right. So let's see a few more here. IWMs.
That's benchmark stuff.
All right.
So how many do we have?
We have. We need 3 more, but I can put those 2 that were in.
Put that Momo and the ones that we had inside improving, starting to turn up.
VB, I believe.
Yes.
And then we get 1 more, and I'm going to make that whatever the second most popular one is. So
there you go.
Let's see. So TJX is the second most popular, or the first popular, and we're going to do Walmart. So, and we're going to do, let's do GERN, GERN as our final. So, okay. So I have, well, not even 10 minutes. Well, I've got just about 10. We're going to try and get through these very quickly, guys. I'm going to move right on through them. All right. So let's start off with, get this in here though. Okay. All right. So I'm going to go, let's start off with Trex. And the idea, of course, is that we can annotate and then save them very quickly within 10 minutes. So let's look. All right, so rising trend channel, first of all, here we go. Let's get it in a color we can see. All right, come on, there we go. Yep, pretty much a rising trend channel. I think that's looking good. In the very short term, I suppose you could make a case for a flag. The fact that it did pop up above this overhead resistance, liking that. PMO is now showing a buy signal, although I have to say it's been rather uncertain as to what it wants to do. So in general terms, I'm looking at this, and with the PMO buy signal, even though it's kind of a flat PMO, I think we could expect to see higher prices here. It's up 0.5% today, so not so bad. So let's see. I will save these as the way I do them in the chart list, and we're going to do that. Copy that, and let's just make it. We'll put it in the intraday for now. Okay. Okay, next one is TJX. And wow, nice pretty breakout here. Let's get the support resistance on this one. Now it's been in a trading range for quite some time, and we're now getting that breakout. Look at the PMO is starting to curl upward. That is definitely something I like to see when I look at the PMO. OBV, it's starting to turn up, but it's beaten through that declining tops trend line. It's mostly flat. Would like to see better, but wow, nice scooter. So I think TJX looks pretty good right now, actually, with that breakout. And you could wait for a little bit of a pullback on that, but I think it's looking pretty positive at this point. So now we will save that. Okay, next one is XPH. All right. Okay, support resistance. This is usually, as soon as you look at a chart, I mean, that's what we're looking for, is possible support and resistance. And you're looking for the most touches, as we say. So I'm looking at this one. We do have a very short-term symmetrical triangle here. Let's do that. That is a continuation pattern. So the expectation would be a continuation of this move to the upside right here. Again, I think you could make a case for a flag if you wanted to. Usually I like to see flags, though, to get that declining trend channel rather than a pennant on the end, but pennants are good. So you've got the break above 45, but we have pulled back quite a bit, and you can see the PMO is starting to curl over. So for me, I would hold it at this point, but I would be watching very closely to see what momentum tells us here. And if it can't hold, if it can't close above this level here of what we see as overhead resistance, I'd be a little bit concerned about it. I don't think I'd get in at this point. Okay, and this is 03. Next one. And again, this is just to show you how quickly you can get in there, annotate, and add symbols to a chart list. Okay, this is a trading range for sure, and I'm actually going to make this a little bit darker than I normally do. There we go. And you can see how it lines up with previous, again, overhead resistance that becomes support. You can see overhead resistance that now hopefully will become support. You get a 520-day EMA positive crossover like that. You've got the PMO just giving us a buy signal here. Scooter is improving. I like this one to reach the top of this trading channel. I just think your risk reward might not be there because, excuse me, price is sitting right in the middle of this trading channel. We did get a breakout below let's see, declining tops line. There you go. So that's a positive there. So this, this could be a candidate for me. I probably wouldn't, just because of that fact that it is sitting in the middle of that zone, and my risk reward isn't really what I would want at this point. So for me, I wouldn't take it, but I can certainly, I think you could make a case to take it if you wanted to do that. But yes, for me, no, I don't think I'll be getting into that. And intraday, there we go. Next one up is CSX. And here we go. Wow, nice gap yesterday. PMO buy signal now today. So let's get this annotated. Auto support resistance. Here we go. All right, so we gapped up and then we closed well above this overhead resistance, and we're getting a bit of a pullback toward that breakout area, and that's a positive. And you're still looking at a PMO buy signal. So to me, this is a pretty good candidate, and to get in and or obviously hold at this point. But I like this one. It looks pretty good, CSX. And that was number 5. Halfway through. I've almost gotten it to 10 minutes. I got to show up Tom. Okay, next one is going to be WMT Walmart. Quick peek at this one. Get it into annotate. Wow, long-term trading range here for sure. And we're right at the top of it. And actually, I could drag this up just a little. Let's see, just to get into that gap area. Let's see, we have not closed. We closed it on the way down. So that gap is actually closed, but that's okay. I want to use that as support and resistance. And then here's a very clear area of support. The top of this gap, top of the trading range here back from last August and September. So we got, technically, if you want to look at short-term overhead resistance, we have gotten above it and we have pulled back slightly. PMO is still looking very healthy. And given that, I think Walmart still has some room to run here. Let's go look at here, kind of a flat OBV, but overall, getting some rise out of the scooter. So I think Walmart looks pretty good actually. And reward to risk, you could set up onto that 200-day EMA as a possibility. It's just not been the best trade, for most of this year because of that trading range. So, not a huge fan, but certainly wouldn't give it a thumbs down either. All right, next one, Avgo. Oh my, big gap down. All right, I can just tell you right now, I don't see anything that exciting here. If you wanted to make a case here, well, yeah, see if anything, I would be looking at a possible symmetrical triangle that's not used today's trading. We've got that little bit of a breakout, but this gap, I wouldn't expect to see this to close for quite some time, because obviously there was some news, something was going on. I don't pay that close of attention to that. But notice that 50 200-day EMA negative crossover as well, coming in after this gap down. That puts the Avgo into a, into a long-term, long-term trend model sell signal. And you don't want to see that. Definitely don't want to see that. So I would not be looking at this one. If I remember correctly, was a terrible one, right? On the RRG, and I can see why. All right, this one's got some possibility here. Let's go ahead and look at this rising bottoms trend line. I would look at this shorter term declining tops trend line. Now, the one thing I haven't talked about with my chart pattern workshops that much, but one of the things you want to see is not what I call a long in the tooth pattern, especially with these triangles. You don't want it to get that far into the apex, because then you're going to, you have to have a break on the upside or the downside, and that can happen just with some drift. And I wouldn't, want to trade on that. But, if this is a continuation pattern, I would be expecting a breakdown. The PMO was trying to turn back up, and it began to slow down. But, rising on the OBV, strong scooter. Watch it. I would say watch it at this point, but I would want to see that PMO really start to turn up, and it's just not turning up. All right, and this was 08. And I know my producer's going, hey, you're running late here. So I'm going to move quickly. I have only 2 more. SIVB, I believe, is the other. All right, this is interesting. I had a PMO buy signal, so immediately I'm going to mark that. There we go. And let's look at a trend line here. Let's go ahead and draw this rising bottoms trend line, which obviously is sticking out more than anything. And does that match up? It sure does. We've got a nice rising trend channel here as well. And now let's look at the auto support resistance at that gap, at that, I'd say is part of the double top, that little bit of the bottom there. And you can see this is a breakout. You know what? I like this one a lot. I know it's down over 1% right now, but it's going down to test the bottom of this rising trend channel, and the PMO has a buy signal coming in. So I like SISFB, and that was 9, and 1 more, and then I'll move on. The last one will be GERN. All right, I can already tell I'm not a fan. Again, it is near the bottom of a possible trading channel here. I suppose you could also, well, I mean, I suppose you could make a case for a, let's see, a descending triangle, but that of course is not a positive pattern. We don't want to see that. So you would expect a breakdown from this. But like I said, this is what I would call long in the tooth as far as a pattern is concerned. We're near the apex. Something is going to happen. But you can see the PMO is turned down below its signal line. Certainly not a fan here. I wouldn't be looking at this as something to jump into. All right. And that completes the 10 and 10. And here are our symbols that we just went over. And with that, you know what, let's just go ahead and be right back after these messages, this message for the final market update.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
All right, time for our final market update for the day. And as you can see, markets are still trading lower. Looked like we were going to make a little bit of a comeback here on the Dow and the S&P, but it's fallen right back down, testing some intraday lows currently. NASDAQ also lower. NASDAQ 100 following suit, of course. Mid caps and small caps, though, on the positive side right now, could be forming a very short-term flags situation here, but we have hit intraday highs, and it looks like we're starting to head back down. Same for the Canadian markets. TSX is up quite a bit, has surpassed yesterday, this last 3 days high, but it has hit that range, and now it is starting to turn right back down. Treasury yields are down about a little over 1 basis point here, 2.845%. We can see that the UUP had the big gap up and was consolidating, but I guess because I was getting bullish on the dollar, it's fallen quite heavily over the last 10 minutes. We can see, of course, gold, as we were talking about, reverse correlation, and it's now made a big jump to the upside because we did see that drop with the dollar. USO is now trading lower, looking at $14.09, down 1 cent. And the VIX has been rising. It looks like we're getting ready to get back above 13, but currently at 12.89. And that completes our final market update. Let's go ahead and get into what would you do? So to introduce this segment, what we have is we'll talk about a particular symbol or company stock, and Julius will give his opinion on it and whether he would buy, hold, sell short, or give a neutral sign, leave it alone. And I will do the same. And then we will compare and see of course, whether we agree or disagree, we don't know. And then we'll check the poll and see whether you guys agree or disagree. So since I have the screen, I'm going to go ahead and start with mine, if that's all right with you.
Yeah, will be my guest.
All righty. Let's see. I think I put this one in here. There we go. Okay, so first, actually, I'm going to go ahead and go to the daily chart. Okay, I like Lockheed Martin right now. I would have liked to have gotten in closer to that buy signal, but we are seeing that PMO moving toward positive territory. And here is what I would call a high and tight flag. I really like this flag setup. 50 is below the 200, so you always want to show some caution when that is the case, because as far as decision point is concerned, it's in a long-term bear market situation. But as you can see, it only recently joined those ranks, and it is starting to rise, and the margin is thinning. So I wouldn't be, I think our expectation of a breakout here is certainly viable, despite the fact that I do show a long-term trend model sell. But look at that OBV rising so very nicely. And we've hit that overhead resistance. Let's go ahead and annotate this. We just about hit this overhead resistance. And actually, I'm going to make this fat because I think we have we have a zone, which is why I like to do them this way. So they are opaque, and that way I can kind of grab in a couple of the lows and the highs. So in this case, we have these highs back here from May and even June a little bit. And this matches up very well with what was support earlier this year. So we're getting ready to hit that overhead resistance. But I feel pretty good about it right now. And looking at that scooter going to the upside and all of that, I think it looks pretty good here, Julius. I am going to say that I would hold it and certainly consider it as a buy, just based on what I'm seeing on the chart. Now, I do want to show you also the weekly chart, because that also bolsters my case, I would say. All right, so let's get the annotate tool here, get back to this, and I'm actually going to get thinner on my support and resistance line. So I'm going to add it right in here. And you can see on the weekly chart, we're just now butting right up against that overhead resistance. And the PMO has just turned up. So that is a positive, even for an intermediate term trade. So I'm liking this. I would have to say that I would be a buy hold on Lockheed Martin. So you have about 7 minutes, Julius. Let us, what do you see?
Awesome. We have a trade.
Ah, okay.
Because I'm gonna sell my Lockheed Martin to you. Let me get this right. Share screen. There you go. Okay, because obviously I need to look at RRGs first. So by the way, maybe you know that you can now run an RRG right off the sharp chart bench. It's in the drop down here. So if you stick in this case LMT, you will get an RRG versus SPX. In this case, that's fine. Populated with just one stock, in this case LMT. I'm gonna centralize it, and this is not a strong rotation. It's very low on 94. It's picking up a little bit of momentum, but this is a huge down move. This is very weak relative strength with a little hiccup right now. So if we bring that to the daily, we see a different rotation, not surprisingly, going into the leading quadrant after a strong rotation here. But what I see is that there is very little or no momentum behind this move. It's moving higher on the RS ratio scale. There's no momentum. So the odds are for this one to roll over inside leading and go into weakening. Combine that with the very weak position on the weekly RRG, and just by looking at the RRGs, you have a situation where you have a stock that has entered a relative downtrend, went through a short-term hiccup or recovery, which may last a little bit longer, but eventually probably has to roll over back to weakening and go into lagging again on the shorter term time frame as well to support that that weak longer term picture. Now, if we go to the price chart and we start off with a weekly, then very clearly, update, that helps. Let me put this so everybody can see everything. The one thing that stands out on this chart for me, and which I will annotate, is this pretty serious double top, and it is completed because right here is the lowest low. Need to make that a little bit fatter. It's solid. So for me, this is an important thing to look at, because I think that this whole uptrend that we've seen even before my chart starts in 2014, higher highs, high lows, all the way up, and a double top is a trend ending formation. And it's doing that perfectly. It's coming at the end of a trend, or it's coming at the end of a very long trend, and it has completed. Price target off of this pattern, let's say roughly 320, 360 is $40. Below 320 gives us 280 as a target. We haven't reached that quite yet. We're bouncing right now. I can see that, but I believe that this area, well, let's peg that between 320 and, now what shall it be, 320 something, 323.76 is the low here. So between 320 and 325 is a very, very serious resistance level. And we're bouncing against it from the downside. Now look at the relative chart. There we see a very strong uptrend, which has completed and rolled over and now went into a downtrend, pushing LMT into the lagging quadrant. So the weekly chart for me shows a trend reversal with a new series of lower highs and lower lows in the making, with a rally back to back to old support, which is now acting as resistance. Let me save that. And then we go to the daily version. And if we look at the daily, then we see that big double top formation in more detail. Look at this super big reversal day, because it was a day, right at this high. We've tested that 325 level a few times already. We're doing it again. The relative strength line is below an important support level, which it is testing. So I see very little upside. Let's say a maximum of 325, and these blips are 327.50 probably. So we've got only a few dollars of upside, and we've got, I think, a minimum of 295 as a target on the downside, but probably 280 if the double top is going to complete, and then that's the minimum target. So for me, this is a short with a potential target around 295 and a tight stop. Let's give it some room to breathe. 328, 329, just below 330.
All right.
It probably gives you a good, profit to loss ratio, because if it goes above this 327.5, the double top is faded, it's violated, it doesn't count anymore. But for now, the double top is the big pattern that is in play, and we're just recovering and ready to go down again.
Okay. Well, okay, maybe I do want a short. No, actually, I'm not.
Was I that convincing?
You were very convincing, but I still feel pretty good about it. We'll have to see how that all works out. Of course, trading tomorrow doesn't just count as whether it's right or wrong, but it will be interesting. We'll see.
This show is recorded. This show is recorded, right? So we're on the line now.
Exactly. All right. Well, let's look at the poll. What does everybody else want to do with Lockheed Martin? What are they thinking? And you know, a lot of people said, just, you know what, leave it alone. And I think because we did get those two different opinions, you know, those two different set of analyses, I can totally see why people would say leave it alone, because I think you can read those charts similarly, and I think that can be the problem, really. So I think our audience felt.
No, that's true. And you know, quite frankly, it's, you know, you can play all these games. You can have two analysts and you know, one say and just forcing the other one to come with the opposite case and advocate the opposite case.
Exactly. Maybe we need to have a segment like that. I think that would be sort of fun, where we pick one stock to do, and then instead of just, you know, come out with what we want, it's no, you have to take the opposite position. And
exactly.
Yeah. And, you know, I hate to say it that way, but I mean, you know, a lot of times you can make a case either way.
Yeah. Oh, yeah, absolutely.
I could look at it and you say, oh, sell short. And I could be like, well, I can figure out a way to make this look like a buy.
Hey, isn't that what makes a market?
Yeah, I know. And as we talk about too, there is a lot of creativity involved in what we do, and certainly a lot of subjective, you know, visuals and that sort of thing. But it is all based on, you know, the indicators and the numbers. Ultimately.
Well, and for me, the time frame is crucial. You know, something can be a buy on a daily chart and a sell on a weekly.
Absolutely.
You know, so the time frame is very, very crucial for the case that you're building.
Right. And I think that's one of the things when Tom and I talk, is the fact that I do tend to be a little bit more intermediate term. I mean, I don't use candlesticks on my charts, because those are extremely short-term patterns, so to speak. And so it doesn't really do me that much good to look at the candlesticks so much, at least on a daily chart for sure. So that's why I generally don't have them on my daily charts. So, but that's my preference, as we all have our preferences.
Right.
Let's see, what kind of questions did you end up having on RRG?
Yeah, I'm not sure if we have time for that, but there were a few interesting ones. And the one that you responded to a few times is the updating of the groups in the RRG dropdown. I can actually update the groups in RRG, and I do that, and I try to match when updates by the various sources are done. But as you all are aware, there is a big reshuffling going on within S&P, and we have various sources, and some of them are contradicting others. Yes. So we are in the process, and I'm working with Professor Bob in the data department. The guy is a walking library. So we're working on that and aligning everything, but it is not a very easy task. So it's work in progress.
It's definitely difficult, and they're always changing.
Yes.
It was great having you today, Julius. I'm looking forward to co-hosting with you tomorrow.
Absolutely.
Yeah, so I just want to thank everybody also for being with us today. And do remember to complete that survey when you exit. We do love to get your feedback. I know Tom's going to be looking for a subject for his workshop. And as a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, noon to 1:30 p.m. Have a great afternoon, everyone. We'll see you back here tomorrow. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.